Should you go with a 15 or 30-year mortgage? First off, I want to mention that these aren't the only two loan terms that you can choose, but these are probably the two most common, and there are definitely pros and cons to both. So it's important that you look at your personal financial situation and determine which option is best for you. With a 15-year mortgage, you'll have a higher monthly payment, but you'll usually have a lower interest rate, and with half the amortization schedule, your overall interest paid over the term of the loan will be much smaller than that compared to a 30-year mortgage. With a 30-year mortgage, you'll receive the benefit of a lower monthly payment, but you'll typically have a higher interest rate, and with double the amortization schedule, that total interest paid over the life of the loan will be much higher as compared to a 15-year mortgage. One of my favorite tools in analyzing the pros and cons of each mortgage vehicle is a simple mortgage calculator that you can find on Google. Before I get into these numbers, I want to remind you that I am not a lender. I am just a realtor, and the best way to assess your situation and better understand your options is to actually speak with a lender. And while I'm not a lender, I've worked with some incredible lenders in the past, so if you're looking for one, don't hesitate to reach out. I'd love to connect you with some of the many great lenders in my network. And I want to warn you, some of these numbers may surprise you, but I encourage you to speak with your lender about opportunities for faster principal paydown. Finding opportunities to make additional payments toward your principal can greatly reduce the total interest paid over the term of the loan and can increase the pace at which you build equity in the property. Let's say the home price is $300,000. And for the sake of the math, we'll assume you're putting 20% down or $60,000. We'll also assume a 7.5% interest rate on a 30-year mortgage and a 6.9% interest rate on a 15-year mortgage, even though those aren't going to be exactly accurate for the rates that you'll receive. We're also going to remove property taxes and insurance from this payment just to give yourself raw numbers on the actual mortgage payment. So for a $300,000 house with 20% down, a 30-year fixed-rate mortgage at 7.5% interest rate, your total monthly payment will come out to $1,678. When we adjust the term to a 15-year mortgage at a 6.9% interest rate, your total monthly payment comes out to $2,144. So with a 30-year mortgage, you're going to be paying $466 less per month. However, assuming you're going to keep that same mortgage for 30 years, let's look at what your total payments would be. So paying $1,678 per month times 12 months times 30 years, your total payments come out to $604,080. Compare that to the 15-year mortgage, where you're making $2,144 payments each month for 12 months for 15 years. Your total payments made come out to $385,920. So in order to gain 100% equity in your home, you'll be paying $218,880 less total dollars on a 15-year mortgage compared to that 30-year mortgage. Having said that, as a first-time home buyer, I think it's so important to have a safe reserve of cash just in case any problems arise. By saving $466 each month, you're saving $5,592 each year. Over 5 years, that adds up to $27,960. That is going to be super valuable in addressing problems that might arise with your house. And when invested correctly, who knows what kind of returns you could yield through that investment. The other thing you want to consider is the appreciation that might occur over a 15 to 30 year period. And this is where we really get into the weeds, because now you're looking at the time value of money, the rate of inflation, and the devaluation of the dollar. We can get super complicated with the math here, but I just wanted to give you raw numbers so you had a good idea of what those payments look like. At the end of the day, you just want to look at where you're at, what your financial and personal situation looks like now, and what your goals are in the future. And that way you'll be able to best determine which option is a better fit for you. I hope this video was helpful. Please like, subscribe, and share with anybody who might be interested.